Now let's talk about a method I call Muade's intraday timing. This is a tool that can be used, or a technique that can be used by short-term traders. It's not really for those who want to be medium-term or longer-term time frame. This is for those who don't mind doing the little dirty work that can help them scalp a few points here and there for a trade. And one thing about this method here is that it does make you take a step back instead of jumping in whenever you see a stock move. It gives you some technical reason for you to be patient, so you can capture the stock intraday instead of buying it extended. Now, how many of us, and I bet all of us, have been in that situation where you buy a stock and it immediately turns upside down and you are losing money from the moment you buy it? So this method is geared to help all of us to take a step back and wait for the stock to come to us intraday while the daily action is still good, the weekly action is still good, all the other things are there, but instead of chasing it midday, we can take a step back and wait for the stock to come to us. Usually you'll find that the buy point comes around midday of the trading day. As traders go into for lunch, most stocks will take a small break, and this is when we want to come back. Now, the other thing I'd like to talk about is that you want an orderly pullback during the day for this to work. It works best when there's an orderly pullback, and it doesn't work all the time, but it helps you not desperately chase a stock. And what happens is that using the RSI, again, is obviously, as you can tell, my favorite indicator, is that a stock will be trading higher. Let's say this is a 68, that's 50, and let's say that is a 30 on a 5-minute chart. I use the 10-day time frame. You can use whatever you feel comfortable with. Let's say a stock, you don't want to buy a stock when the RSI is over here on the 5-minute chart. You want to wait for it to pull back orderly during the day, and somewhere at some point it's going to be trading around the 50 level area, a little sometimes below, but around this area here. And usually what you want to do is draw a nice line. You don't have to draw it literally, you can just look at it and tell that if you draw a line, the moment this top on the RSI have been broken and the stock moves above that, then you can get in the stock. Remember, you've already looked at all the time frames, everything is good, you just know you're going to buy the stock, you want a good buy. But now you want a nice pullback, buy it here when it gets out of that range. Now I'll show an example, and eventually I'll have another video that is going to have even more examples for this intraday timing technique. So now let's take a look at one example right now. And the example, we see that on this day stock was, it gapped up, and also I might want to note, yeah, the stock gapped up. So instead of buying it here and being caught by a sell-off or a pullback, the best thing is to wait for the RSI to guide you. So the stock, now you could have, in this particular example, there was no pullback in the stock. It kind of stayed, actually formed this small flag here, something like that. It formed a kind of a flag here. So the entry point could have been when it moved above this wedge. But on the RSI, you see, you don't buy it here when it's extended on a 5-minute chart. Wait for it to come back and break that trend on the upside. So that's where you want to come in, and that coincides with this move. Now notice, had you waited for this intraday signal, you could have bought the stock, and immediately from there the stock moved from under 24, and within a day it was trading 27. So probably this was a breakout. I only have the 5-minute time frame for you. Now the next day, the same thing. You don't want to buy the stock after this. Now, as we had mentioned on my gap up indicator, notice that the stock in this example closed very high on the daily intraday, closed I would say probably in the 80s or 90s on the RSI, and the next day, even though we did not gap up, we had eventually the stock did spike up intraday, moving from around 24 25.40 all the way to 27 in under, I would say, 20 minutes. So this close here, very strong close, predicted this move. So we didn't get the move on gap up in the open, but eventually we formed this another tight pennant right there, and we spiked above that. All right, and another thing you could have done had you missed all this move right here is intraday. Again, use the same technique. Don't buy the stock when it's extended. Draw a line on top when it moves to the 50s, settles down on the 50 for a little bit, and then when it breaks that trend, you want to buy it now there, which coincides with this move from here to here. So it helps you just not be upside down immediately. This is Eric Mother.com. Watch out for the follow-up examples for this technique. Peace and blessings to you. As always, chicky fresh.